Okay, so let's look into what is a stop loss order, what is a market and limit order, or OCO. One cancels the other. What do they mean? How to use them? And the 5 things you need to know about stop loss orders. This is everything we're going to cover in this video. Stay tuned. Hello and welcome to another episode of CryptoCon, my video podcast where I discuss everything related to cryptocurrencies. I do market analysis, I bring you news and updates and tutorials on how to use different wallets and things like that. But today we're going to be looking to trading and how to place a stop loss order, which is one of the questions that I get the most. I'm going to give you the differences between the different orders in an exchange, in a crypto exchange, and I'm going to be using Binance as an example just because Binance is the most used crypto exchange worldwide. But this can apply to any exchange that you're using. So whether you're using Bittrex or Bitfinex or let's say Poloniex, OKX, Huobi, whichever exchange you're using, it doesn't really matter. Most of these exchanges actually have all of these different types of orders. So I'm going to show you how to use them, and especially I'm going to focus on the stop loss orders because, as I said, this is the one that everyone keeps asking me about. People are confused as to how to place stop loss orders, why or when. So I'm going to cover all of these things. But before I start, let me quickly say thank you to the sponsors of this video, Cobo Lend, which is a USA company based in Ohio. It is a new community-driven lending platform. In other words, it is a DeFi project, which, as you know, is the fastest growing sector in crypto right now. They have a token that will be launching at the end of this month, October, and the token sale actually starts on the 31st, which is Halloween. More importantly, for those who love a freebie, you can join their community and receive airdrops that are currently ongoing. What you will have to do is navigate to their website from the link in the description box below. This is their website. Once you are here, you will go to services and you will go to earn drop. So you will join their community. They have a few different challenges that give you a number of tokens for free. And if you want to participate in the token sale, it's also here in services, token sale. Make sure that you go through the description here, all of the details, and you will need to register in order to take part in the token sale, which starts on the 31st of October. It is not open to all the countries and all regions, so make sure that you check this here list of excluded countries. And if you go to the end of the page, you will also find here their Telegram link and news and updates, things that will be important for people who want to participate in this token sale. Okay, now let's move into the different types of orders and explain the differences and how to use them. Okay, so this is Binance. As I said, I'm using Binance purely because it is the most used crypto exchange, but if you're using any of the other exchanges, this will be valid as well. Most of them have these different types of orders. I will be using spot trading, which means that I will be buying directly from the funds that I have into my account, and I'm not using margin trading, I'm not using leverage, borrowed money or anything like that. Okay, and I have a few different options here, and I will go for either classic or advanced. Basic means that I'm buying it directly at market value. I don't really see charts. I can't place my own order. I can't choose the price or place a stop loss or any of those other things. So I'm not really going to be going to the basic. That is the market order. I'm doing spot trading, so either classic or advanced. In my case, I will choose the advanced just because it has a better layout and it gives me more options here. So the first thing we see, let me hide my camera so that it's a clear screen. The first thing is, as you see here, limit, market, and then you have the stop limit. So these are the 3 options that we see. The limit order, that is when you're just placing an order to buy directly and you choose the price. So you can choose either the latest price and then you choose the amount that you want to purchase, or you can set up your own price. Maybe you want to buy it much cheaper than that, so you say 11,100 or something, whatever it is. This is the very standard limit order. Everyone is using that. You would probably already know how to use it. The market order is, again, you don't choose the price, you're buying it at the current rate, so you will be buying it at whatever is this at the time you hit the buy button. or if you're selling the sell. So I'm not interested in that. The stop limit. Okay, so what are the differences? If I'm buying or selling at a limit order, I'm just setting up the price and then the order is active straight away. So let's say I want to sell at 11,500. It is now less than that. So I'm not going to sell it straight away. Let's say I want to sell 0.05 or something like that. I will place this sell order and it's now sitting here in my open orders. So this is an order that I've just placed. It's going to stay here until the market goes up to that price and hits that order to get activated, to get fulfilled. It may not happen, or it may take, weeks or something like that, depending on how far I place it. If I place it at 12 or 13,000, I might be waiting for months. If I place it at 11,320, it might be in a few minutes, right? But the order is active straight away. It's just waiting there to be fulfilled. Now let me cancel that. If I'm buying, it will be the same way. If it's just a limit order, I will set up my price and I will just place the order. I'm setting it quite low intentionally just so that I don't get it fulfilled, because right now I don't actually want to buy. So now we see here in my open orders, it sits here at 11,113. Currently we are at 11,314, so I'm placing it $200 below the current market value. So I will be waiting for some time until the price goes down, and it may not. So I need to have already estimated here and do my analysis and make sure that there is a chance of this order getting fulfilled. And as you can see, I even have orders here for 10,700 and even lower, because I'm prepared. If there is a dip, I want to actually buy at these prices. But this is irrelevant. Basically what that means when it's a limit order is that the order stays here and it's active and it's waiting for it to be fulfilled. Okay, so now let's talk about the stop limit. And if you click here, you will see that there are two options. You have the stop limit and you have something called OCO. That means one cancels the other, and I will go there as well, but let's first look into the stop limit itself. So why is it called stop limit? The first thing is because you have, when you go to stop limit, you will see you have actually two prices here. You have a stop price and a limit price. Some exchanges would just call it a stop loss order, which is really the purpose of it. People use it the most to actually prevent them from making big losses. That's why it's called a stop loss. Or it could be stop limit, which is pretty much the same thing. So basically what you're doing here is, let's say you already have purchased some Bitcoin, and now you're hoping for it to go higher and you want to sell it higher, but what's happening is the market is actually going down. Let's go to a lower time frame so that we can see it better. So if you see here, right now we're having a correction. It might be just a small correction and then the price could go up again, but it could also be an indicator of a trend turning. And this is not a great example right now, but typically after a good rally up, you would have a correction that would be going much lower than what we're experiencing right now. And this is the reason why people would be using stop losses, because they don't really want to get caught up in a downtrend, and they want to sell before that downtrend starts going lower and lower and lower. The prices, I mean. So here we see that we hit 11,179 and we started correcting, and it was a small correction at first, but then boom, what happened? We went all the way down to 10,300, and then boom, yet again we go to 10,100. This is quite a significant loss for you. This is more than 10% loss. And this is pretty much the reason why people are using stop losses, because if it's going to be correcting that much, you don't really want to be waiting through all of that correction. Yes, the trend continued up again and it recovered, but sometimes this could be the beginning of a downtrend. The trend could have reversed, and if this is the beginning of a downtrend, you don't really want to keep waiting and waiting for the prices to keep dumping and you losing money. So what you would do in that case is place a stop limit order, stop loss. And what you will do is you will place the order to be activated at a certain level where you feel comfortable to make a small loss at that level, but at least it will prevent you from losing more money. So let's say that you bought your coin somewhere here. So you bought the coin here, it went up a little bit, and then it starts going down. Now, you don't really want to sell it straight away because it could be just a small correction. And a lot of the times, the prices don't go in only one direction. They go up and down, up and down, up and down. So yes, it is correcting right now, but it's not a guaranteed that it will go further low. So you don't really want to be selling yet. If you're chasing a higher profit, of course, maybe you're happy to sell here and take the profit from this level. But, if you didn't sell, then the price continues going down. So now what you can do is, or you can do it straight away after you buy. You estimate where is your support level, where is your nearest support level. And once you establish that support level, and I did another video to explain support and resistance, once you establish that support level, you will be able to anticipate how low the prices can actually go. So that once you do that, you know where to place your stop limit order. And what's happening is you're placing here the price at which you want your order to get activated. Until then, your order will not be active. Meaning, if I want to, let's say I want to activate my order somewhere here, because if it hits that level, I can see that this is a support level. If we break down this support, the likelihood of the prices dumping further is very high. So I know now that there is another support here as well, just a little bit higher than this level is another support. We can see it because the prices first here, it was resistance. They were stopping here, we were being stopped. Then as we broke up from this level, we started testing it and we started being stopped here, which means that this is a support. Of course, the support is not just one line, it's not only one level, it is actually a range. And for this particular example, this is the range. So the support is actually between these two lines. This is the range which acts as a support. Once this is broken, we are going lower, and then we are going to the lower support, which is here. And I can draw it here. Maybe you already know that, but for those who aren't aware, I'm explaining it because this is important for you to know where to place your stop limit order. So we can see it here. This is where the prices were being rejected. We were stopped. So this is another support. And if we extend it, we can see very well that once it dumped, it actually came to that level and then it got stopped. So what I'm saying is that you need to now decide where you're placing your stop limit order so that you can prevent yourself from further losses. You don't really want to be losing all the way down to the 10,100. So what happened is you bought here, which was around maybe 10,800 or something like that. The price went to 11,000. You didn't sell, but now you can place your stop limit and sleep peacefully because you know that even if the price starts going down in your sleep, your limit order will be activated. So it is a sell order. 10,800 is when I want it to be activated. 10,810, let's say, is when I want to sell. It has to be a small difference between these two, because if it's a big difference, then the price might not actually go there. Let's go to the 30 minutes. So we can see as the prices start going down and as we hit 10,800, this here in this candle, which is a 30-minute candle. So during these 30 minutes, we hit it down, then we went up again, and then we've been going up and down for about 30 minutes until we started the next 30-minute candle, which is around here. It's still just slightly above the 10,800 level, which means that we hit it, maybe we went to 10,780 or something like that. Then we went up again to 10,800 and perhaps 40 or something like that. So during that range is where my order will get activated and it will get fulfilled. And this is the reason why I'm doing this stop limit. So now I will sell at this price, and I will do it because if this level gets broken, then I know that we will go further down. And that's what happened. We went further down and we went to the lower support. So if I've already estimated what is my lower support, then I could also use that to my advantage and I can rebuy there. Or, you know, I can sell at 10,800 and I can rebuy at around 10,200 and something. We even went lower, we went to 10,136, but you cannot anticipate that, you cannot rely on it, so you will place it slightly higher. So my buy order will be for 10,200 and something, just to make sure that I accumulate the same amount that I just sold here. Even though I sold it with a little bit of a loss, it was a small loss compared to the loss that it would have been if I waited all the way down. And if this was a downtrend, then we could have gone even lower and lower and it becomes a bigger loss. So this is why on some exchanges you will see this being called a stop loss order, because it stops you from making a bigger loss. Now, let's see the difference between OCO. This is one cancels the other. So here what I can do is, let me just go to another chart. Okay, well, let's say that I purchased bond somewhere here, and then I'm waiting for it to go up. It might go up, it might not. So let's say, what price is that? 665. So now I will go here to the OCO, which is one cancels the other, and I will be placing I will set two different prices. The first price is my target price, my ideal target price, and as we can see, that coin has been much higher in price. So if I want to sell it at at a good profit, I will be going for this kind of prices up here, or maybe even up here, which was close to its all-time high. So let's see what is this range here. This is the first resistance. So when we start going up, we will first be stopped here, and maybe for a period of time we will be consolidating around this price. Once we break above this price, we will go for the higher one. But let's say I want to be playing it safe and I want to sell at around 920. So here I will place an order for 920. So the first price is my ideal target price. Then the second one is my stop order. And this is in case the price continues going down and I don't want to make a big loss. I will be placing a stop order to prevent myself from any further losses. It's already below my buy price actually, which is not great. And what I can see, I need to now estimate where is my support. And the support line, let me make that a bit bigger. My support line currently is here. So we can see that we came down here, we got rejected, so we went up. The likelihood of coming down here is very high. But whether we will get rejected again or not, we don't really know. We see here that this is the clear support, and this support got broken down. As it got broken down, it was very brief breaking, it's just wicks, and then it got rejected. So I don't really want to place my stop order at this support level. I want to place it lower. So I would say if we actually break down this wicks, this support, which last time we didn't go that low, if we go that low, it is a strong indicator that the prices will continue going down. And at this point, I want to sell, and I will make a loss because I bought at 650 and I'm selling at 494, around 5. So it is a loss, But if we break that level, we are definitely going lower. So at this point, I don't really want to lose any more money, and I'm gonna put my stop at 494. The price that I want to sell would be 499, let's say, and the amount will be whatever I decide. So if let's place this, and as you can see, this is now displayed here. I'm using the trading view display because it gives me more details than the original display of Binance. This is the original chart that Binance is showing me. This is the trading view display. Here I actually see far more details, that's why I'm using it. So now I just placed the OCO order. One cancels the other. It means that if the price goes up, it will be hitting this order that I placed. This is my limit maker order. It is for 920. If it goes up and it hits this order, it will cancel the other one. If the price, however, goes down, it will hit this order, which is my stop loss order. It is placed to be triggered at 494, and the actual price that I want to sell at is at 499. So if it goes down and it hits this order, then it will cancel this one. This is why it's called one cancels the other. Okay, so this is how you place the stop loss order. I showed you how to place it. I showed you when to place it. I showed you where to place it, at what levels, how to estimate your target levels, your support levels, so that if that support gets broken down, then the order needs to be activated because the prices are most likely to continue going down. I showed you also the difference between a regular limit order and a stop loss order, and I also showed you the difference between the stop loss and the one cancels the other, which is the ideal case. Now, not all exchanges have that option. Some exchanges don't offer the OCO type of order. They only give you the option to place a stop loss order. But in any case, it is important once you buy to be placing these kind of stop loss orders so that you don't actually lose money if the market starts going down. So to answer the question that someone was asking me the other day, when should you be placing that stop loss order? Pretty much immediately after you buy, you can place that order. So let's say that I just bought a coin here at 6.11. Now I can already place my stop loss order, and I will be placing it here at the 494 level because this is the support. And if I purchased at 610 and I sell it at 494 or 499, I'm making a loss, but it is a small loss. So that's why as soon as I purchase a coin, I will estimate the support level, and I would say, if we break that support, I want to sell, I'm out, I'm taking a small loss, I don't really care about it because I don't really want to take a further loss. Let's say that you purchase the coin here, up here on the way up, right? It's going up, it's going up, it's going up. You get tempted, you get caught up in FOMO, many people do. And so you purchased the coin here when it was at $10. Then it went all the way up to $17. Yay, great success, but you didn't sell. So what you can do now is, maybe you are still greedy, you want it to go higher and higher to $20 and you want to be selling it at 20, you're not happy with 17. At least, because you already bought it at 10, at least what you should do is set up a stop loss order at around the price that you bought, so that if it goes up and starts correcting, you don't really want to lose money. Let's say we are just here. We are looking at this chart. You bought it at 10, it goes up, it goes up, it went to 17 and it's now correcting down. Okay, so since it's correcting down, there is a likelihood that it could go down and down and down. So what would I do? Well, let's say that it's currently somewhere here at 15. I saw that when it was correcting, it went down and it tested the 11 level and the 12 level. So I would say, okay, at this point, this is a good support level. If it gets broke and it's already been tested twice, if it gets tested the third time, the likelihood of it getting broken is very high. So I want to sell at that level. So I will put my stop loss at this level, 12.39 or 12.20, something like that. And I would be selling it around that price. And this is because if it goes down and breaks that level, I want to exit at a profit. I bought it at 10 something, maybe I bought it at 11. So I don't want to wait until it goes below my buy price at this point, because we're much higher. And look at what happened. It actually went down to that level, it tested it, and it broke it. And then it went all the way down to 9, which is below my buy price. So ideally, I would want to sell here at the 12 level, and then I'll be waiting for it to go lower, and maybe I will buy it again at the 9, because it is lower than my buy price. I made a bit of a profit because I saw that profit. I bought it at, maybe I bought it at 10 or 11. I sold it at 12. That's a small profit. Now I can buy the same amount at 9 and ride the next wave, and this time try to catch it higher. Or maybe I want to wait and wait and wait, and I buy it down here at 6, and now I'm waiting for it to go higher, to maybe go again to the 10, 11, 12 and sell it there. So this is how the stop loss order is preventing you from making big losses. If you bought it at 10 and it is now 6, that is a big loss. So you should have exited that market here at that level, at when it was challenging this support, because if it breaks it, then it goes further down. It broke this support, it went further down. It had another rally, but it went down, it broke that support and it went lower. It broke that support and it went even lower. So this is it, guys. I hope that it makes sense. I hope that it's more clear. I know that I explained it quite in detail. Maybe you got it halfway through the video, which is fine, but still, thanks for staying until this point. Alright, well, this is everything from me for this video. I hope you learned the differences between the orders and how to use them. If you did, if you find value in this video, make sure that you share it with someone else who will also benefit from watching it. Leave me a like and a comment below. Let me know how you feel. Let me know if you learned or if you still have any questions. And also, if you haven't done that yet, please subscribe and hit the notification bell so that you can get notified next time I post a new video. Don't forget to check out the links in the description box. I have quite a few helpful links, including the link to my book called Learn Crypto. This is the book where I share all of my experience and knowledge about cryptocurrencies. I've been in crypto since 2014, late 2014, and I've gone through all of the highs and lows of the market cycles. I explain how the market cycles work. I explain when it's a good time to buy and when it's not a good time to buy or sell as well, and also a lot of the mistakes that people commonly make. So hopefully you will be able to avoid this. If you're new to crypto, if you're still learning about this asset class and you want to invest in crypto, I urge you to get the book, and hopefully it will help you to avoid mistakes that I've made and many other people have made. It will definitely help you, and it will make you more successful at investing or trading cryptocurrencies. So check out the link. It is available on Amazon. It's been 2 months since I launched it, but I have it cheaper on my website. So the link is in the description box. Thanks for watching, guys, and I'm gonna see you in the next video.